White House is out with this executive order restricting U.S. investment in select Chinese tech sectors. The country's foreign affairs ministry firing back now, calling the measures, quote, blatant economic coercion and technological bullying. Joining us for a closer look at the order, Deputy Treasury Secretary Wally Adeyemo. Wally, it's great to have you back. Tough push and pull here between trying to implement some of these restrictions and yet keep the lines of communication open and trying to, I guess, foster some trust. How's that working?
I think it's working well because part of the reason you want to keep the lines of communication open is to talk to China about what we're going to do to protect our national security. And we've both telegraphed the moves that the president made yesterday, as well as other actions to not only the Chinese, but also to Americans and our counterparts as well, because we want to be very clear that we're doing these things to protect our national security, not in any way to inhibit their ability to grow their economy. And we want to continue to allow flows to exist between our two countries.
Does it make trips like Blinken's and the Treasury Secretaries to China recently more difficult in the future?
No, I think that what this does is it shows why it's important for us to have those dialogues, so we can be very clear with the Chinese that what we were doing here was to protect our national security. If you step back for a moment, what you'll see is that the actions the president took yesterday were consistent with actions that we've taken in terms of export controls. What we did was we took a narrow set of actions that ultimately prohibit certain transactions by financial institutions that come alongside know-how that would allow China to be able to build things like semiconductors that they're unable to get from U.S. firms. So the actions were narrowly scoped, they were transparent, and now what we've done is we've put out information asking a set of questions to stakeholders in order to better understand how to scope these tools in a way that protects our national security, but allows for ongoing economic flows. So I think that what the actions have done is they demonstrate the importance of continued dialogue and our ability to tell the Chinese what we're doing and why we're doing it, and to assure the world that we're going to act in a manner that's responsible and reasonable in order to protect our national security.
Wally, so the idea that you want to restrict U.S. investment firms from providing capital to certain areas of Chinese technology industry is in your mind, it's not so much that maybe they won't be able to get the capital elsewhere, but that it could have been a way around the export controls and the restrictions on using U.S. technology?
It's ultimately not only about the capital, it's about the capital as well as know-how. As you know well, because you talk to these firms, one of the things that private equity and venture capital firms do, in addition to providing money, is they provide expertise through their stable of experts that work for them, but the other firms that are in their network. And we know that countries like China lack that know-how, and they're looking to get it. So part of what we're trying to prohibit here is not necessarily capital flowing to China, but rather expertise flowing to them that would allow them to build things like semiconductors and advanced semiconductors that are preventing them from getting a hold of using export controls.
Hey, Wally, finally on CPI today, there's been some applause for the inline print. Some are worried about a reacceleration. Some are talking about the degree to which, say, restaurant chains, for example, who want to build more units are getting crowded out by the demand for labor and materials that's going on because of the CHIPS Act and the infrastructure initiatives. How do you think about that, stepping on the brakes and the gas at the same time?
I think the most important thing here is trends matter. And if we were talking just a year ago, we would have seen a number at 9% for headline inflation, and now it's down significantly from there. And if you look at the last 3 months, the data would show that we're about 1.9%. And this is because of the work that the Fed has done, but also because of the work the administration has done to improve supply chains. And what I would say is that ultimately what the president is doing with the Invest in America agenda is making sure that we expand the supply in the economy in ways that will mean that we have the ability to bring down inflation, which we're seeing happen, while also growing the economy and continuing to create jobs. If we do those things well, I feel very good about the U.S. economy, especially when you look at countries around the world. You look at where China's economy is, you look at where Europe is. Every CEO I talk to is looking to deploy capital here because of the investments we're making in America and the progress we're making.